Alright, what's good fam? Alright, on today's video I want to lead you guys on how you can actually understand liquidity. If you're there to understand what liquidity is, I want you guys to stick to the end of this video, as I'm going to show you what liquidity, if you're here to understand what liquidity is, and how you can actually benefit using or incorporating liquidity style of trading in your trading career. Alright, stay tuned to the end of this video and I'll show you guys how and what liquidity is.
YummySounds.com layout track.
Alright, welcome back guys once more. So on this video, as like I said, I want to show you guys what liquidity is and how liquidity can actually be a problem if you don't understand what liquidity is for you when it comes to trading the forex or financial market, right? So let's go straight into the video. Right now, when it comes to liquidity simply means stop losses of market retail traders, right? Me and you, our stop losses out there is what we refer to as liquidity, right? So I'm just going to show you guys an example right here. Now let's say we have a market set up like this. Okay, right? And then in this kind of market setup, we have two types of traders involved in here, right? Just market traders involved at this particular situation of the market. Liquidity down, liquidity up. All right, so in this kind of market scenario, right, we have two types of traders, or about four types of traders involved in this market, right? We have the breakout traders. You have people with their buy stops around this area, looking to buy the market when it's break out from this area. All right, same thing vice versa. On the flip side of it, we have people who are looking to short this market when it breaks out of this same down part of the market, right? So not just that, right, people are still looking to long the market from this support here. People that trade support and resistance, retail traders trading support and resistance. People will want to buy from this support level right here. Same thing on the flip side, we have people who will also want to short the market, that sell the market from this particular resistance right here. Then what happens later on if we have this kind of market situation, right? Okay, now let me give you guys an example, right? Let's say we created a low, right? That market went into this range. A market started ranging, right? So some people is just gonna see that this market impulse right here, this is a reversal towards the upper side, right? And then we're going to assume that we have a supply currently at this area right here. Have a supply area currently at this area. We know quite well that market has to mitigate that area of supply. What is this too? Market has to mitigate that area of supply before even moving to its direction, right? We want to see the market. We know for sure that market has to come into this area of supply, respect this area of supply, and then sell off. Now imagine if the institutional traders, the hedge funds, right, the big banks, right, they want to engage into a sell in this market. They want to actually sell this market right here. They're interested in the selling part of the market. They want to sell the market, right? And then they'll say you want to pump into the market like $1 million, right? Let me start from there. They want to pump in like $1 million of short orders into this market, right? They want to sell the market. Now they've looked in the market, before you can actually sell, you will have somebody to buy from you, right? Before you sell, you have somebody to buy from you. That's just the little basic of liquidity, right? So before they can actually engage in a short trade with the amount of order or the amount of money they want to come into the market with, right, they will want to see people that will sell to them the exact amount they needed to sell into the market. All right, so and these orders or this liquidity, this is what now we call liquidity, right? So they don't have enough liquidity to sell that market. All right, so what they will actually do is they will want to take out some stop loss. These stop losses of retail traders who don't understand how the market works. It is what they're actually after, right? So we know that anybody or people that were selling from this resistance area, their stop losses is actually right here, and people that are buying from this support area right here, their stop loss is actually here. Right, so like I said, they want to pump in like $1 million worth of orders sell into this market, right? So what they are likely to do is, since they don't have that liquidity, enough liquidity to sell that market, they will target what retail traders stop losses, right? So what will they do? First of all, they will go into the market, they will put into the market some units of orders that's to the opposite direction. They'll push the market up, they'll put in enough volume to like push the market or cause a push into the market, right? Once they push the market up, they will clear out every stop losses of retail traders around this area. Once they do that, they will now close their buy position, and the market will now have to return for them into a premium level or a point of interest that we want to enter the market from. So once they have taken out these stop losses here of retail traders from here, then they will go in for a short trade, and then boom, they sell off the market and come forward this stop loss right here. So real quick guys, I'm just going to show you guys an example of this same scenario in the live chart. All right, so we can actually see right here, I'm just going to take this thing back right here. Okay, so we can actually identify right here, there's a market movement, right? This is a nice nice demand area right here with imbalance. You can see the imbalance right here. Market started building up that structure of higher high, higher low, higher high, higher low, higher high, higher low, right? So right here, what can we actually identify? You can see a break of structure to the downside, right? A break of structure to the downside, right? So on this break of structure, we can actually see this double bottom right here. So market went into a range. You can see this range in market right here, and we have this triple bottom right here, 1, 2 and 3. This is what an area of liquidity in the market, right? There's an area of liquidity in the market. So we'll have this liquidity down here, and as well we'll have what this liquidity up right here. Now, like I told you guys before in the previous session, in the previous diagram I made out, I told you guys that the market has to come into here, take out the stop losses of the retail traders. We are looking to go short from this resistance point, and we have a nice area of supply right here. The market taps into this area of supply, and then sell off. It mitigates this area of demand, unmitigated demand right here, and then buys off to a premium level, right? Then not just the premium level part of it, we can actually still identify this area of liquidity, right? Can still actually identify this area of liquidity right here. Okay, that area of liquidity, you can see imbalance on it as well. This is an area of imbalance, right, in the market. So we have the nice imbalance right here, and as well guys, we know we have this nice imbalance right here. So when you're taking your POIs, it has to be little by little, right? So let's see what the market has to do. You can see market taps into this area of supply right here, and then let's see what happens next. It comes down for the it went first of all for this POI, for this stop losses or liquidity right here above, and then came down for the last liquidity for here, and then let's see what happens next. It mitigates this area of demand, right? Mind you guys, I have this area of demand. This is a swing low to a swing high right here. So we are between a supply and a demand, right? So that's the best setup you can get between a supply and a demand, right? As long as you know your direction of the market, then you cannot know which angle you're taking your trades to, right? So we have this unmitigated supply right here with imbalance, on field imbalance, and we have liquidity right here. So what's the next thing that will come to your mind? Market has to take out this liquidity right here before coming down or going towards a direction. So I'll definitely want to have my sell limit right there. I definitely want to have my sell limit situated right there. Okay, as long as you know the market direction, where the market is likely to go to. The stop loss is, all right, give me some minutes. Try and make this a little bit darker. Okay, so right there I'll have my stop loss right here and give some extra pip for what, for spread. All right, so let's play the market and see what happens next. Market takes off from that demand area and we'll start making a run for what, the up movement. So we can see right here, even though you're right about buying this market initially, but market needs that what, momentum, market needs that what, orders on the market to be taken out for it to actually move towards a direction. So you can see market what now mitigate what, this area of what, supply right here above, and then what can we see next? A total meltdown. Boom. Okay, so this is actually liquidity and how liquidity works. All right, so if you had to understand what liquidity is all about, with this little idea I've just shown you guys in the chat, you can be able to identify and know what liquidity is all about, right? So this is JProfit FX. If you've not subscribed to my YouTube channel, kindly hit the subscribe button. I'm going to be coming your way next time with another video, and I will tell you guys something different, right? So stick to this video, stick to this channel, and you get more educational content. All right, this is